And then basically when price came down there, you would expect it to have some bounce and some sideways chop. And that's exactly what we've seen here.
Hello everyone and welcome to the Daily Crypto. We are back with yet another video for you guys, and this time we have Gareth Soloway accompanying us. He is going to discuss Fed policies and where he sees Bitcoin now, so make sure to watch the full video. Before we get started, let's take a quick look at the FNG index. So as of recording this video, it is at 34, which is a huge improvement because Bitcoin is holding 22,000 level for now. It is trading for $22,200 to be exact, whereas Ethereum is at the $1,714 mark. With that being said, let's jump right in.
So, I mean, with the volatility in the stock market, there's been some great plays. You know, the markets had gotten crushed from June through July into early August. Then we saw the stock market stage a massive rally up, then a big fall just in the last couple of weeks before this latest bounce. So I would say in stocks, it's been tremendously good in terms of swing trading and day trading and kind of positioning yourself. And then I also think, you know, gold is starting to look very interesting down here. It's looking like it's trying to hold support. And I think the biggest thing out there that investors should be paying attention to is the dollar and then the 10-year yield. And those both have been on a tear lately, although it does look like the dollar may have topped.
Recent Fed policies have caused stock markets to bounce, and we have seen stocks have a mini rally. Gareth says this is a great time for swing trading, and he is also looking at gold very closely because he thinks it has started to drop down.
So short term, we probably have a near-term top in the dollar. It doesn't necessarily mean we can't go higher in a few months, but there were some key things that actually happened here. And I'm going to bring up and I'm going to show this chart for you guys. Let me just bring up my charts here and I'll show you guys what we have going on. But if we look at the US dollar, the USD JPY, which is the dollar yen, I want to show you this. So this is a line that I was following recently, and you saw the yen was just getting crushed against the dollar more and more. But look at the trend line that we just hit a couple days ago, and that to me was a signal that the dollar may start to weaken. And sure enough, we've started to see that. We should see a continued pullback on the dollar yen all the way back to at least 139. So there should be some more downside. That does imply that the dollar, the DXY, should also stay weaker in the near term. But that was a big one for me. Like so much of this market has been driven by the strength in the dollar. And what I mean by that is, as the dollar was going higher, stocks and risk assets were getting crushed. We even saw gold getting crushed, right? So the fact that the dollar near term has topped, it should give the stock market, crypto, a little bit of a reprieve to maybe have a small bounce higher.
Gareth believes the dollar has also topped out and will now continue to trend lower. As the dollar to Japanese yen charts show, it hit an important resistance level and started to reject from there. If it continues to drop, we will see a surge in financial markets because they have an inverse relationship with each other.
Yeah, so I found that so fascinating, right? And so let's rewind even more to Jackson Hole. So Jackson Hole, he came out extremely hawkish, like the most hawkish I think we'd ever heard him speak. And the markets freaked out, and we saw a big sell-off that day, and really the following 1 week period was a massive sell-off in the stock market. But if you look at the underlying factors, the market, the bond market, which is actually the smarter of markets, it's the market that has more money, it has more big money. So people think about it as being the smarter of the markets when you compare the stock market to the bond market. The bond market did not believe him, right? So let me bring up this chart, and I think this is such a cool chart to show. So we're going to look at the 10-year yield chart. So the 10-year yield, which is interest rates. And if you look at, this is the daily chart, and over here, this was in June. So in June, the 10-year yield was at 3.5%. When the comments for Jackson Hole came out, we were at 3.1, and we've only gone back to 3.3, even with the most hawkish comments the Fed has ever put out on hiking rates and being just hard against inflation. And what that tells me is that they believed that rates were going to go higher back here than over here. And so basically the bond market is calling the bluff from Jerome Powell and saying, you know what, we think you're talking a tough game, but we think that when the economy starts to weaken, you're going to back off really quickly, and we're not going to see rates as high as what the stock market is thinking in this situation.
Jerome Powell has made it very clear that he is going to be extremely hawkish to save the economy. Whenever economic conditions are like what they are now, the 10-year yield bond market likes to pump very hard, but this time it's nowhere near it should be. Even after all the comments by Jerome Powell, we haven't even touched the previous highs for bond yields.
So very, very true. And the number one thing is I think by year end, my price target as of the beginning of the year was about 2,400. That's not going to happen this year. I think you might get back to 2,000 and a half, which would be that high, that triple top high. But the dollar strength has just taken a lot of energy out of the sales of gold, right? So when the dollar goes up, gold generally reacts and goes to the downside. The only thing I would point out, and this is a really cool point about gold, is gold has still been an amazing performer this year. Number one, if you looked at gold in terms of euros, it's having a great year. If you looked at it in terms of yen, it's having an awesome year. In terms of the dollar, not so great, but even then, the dollar's rallied 15% this year, and gold is only down about 4 or 5% for the year. So think about that. In a normal market, if someone told me the dollar was going to be up 15%, I would be like, okay, well, gold should be down 15% then. The fact that it's only down 4 to 5% tells you that it's actually doing its job and holding on to its value very, very well.
The dollar usually goes up in strength when interest rates are hiked, but as Gareth points out, it has actually started to fall. This shows how investors have started to lose faith in Jerome and are looking towards other means to store value. Gold has been performing very well this year so far, and even after the increase in dollar strength, it is only down 4%.
Yeah, so Bitcoin's been dancing right around that 20,000 level. And the reason why I was harping on 20,000 is because that happened to be the high from the last bull cycle. So in 2017, we saw this unbelievable percentage move to 20,000, and then the bear market started. Finally, we got into the next bull market. And then basically when price came down there, you would expect it to have some bounce and some sideways chop. And that's exactly what we've seen here. It doesn't change my view that Bitcoin is not at a bottom yet. Bitcoin in its normal bear market cycles goes down about 80 to 85%. I think it's only down about 70%. And this is the first bear cycle the Federal Reserve has not been printing money during it, right? So in every past bear market cycle, the Fed's been printing money with QE and QE1, QE2, and all those. And this is this first cycle it isn't printing money. And that makes me wonder if at least we go down 80 to 85%, which gives me that 12 to 13,000 target, or could we actually go even a little bit lower? So I think that we're still going to see another leg down, minimum 12 to 13,000, and then I'll have to reevaluate if it's going to go lower after that.
Gareth is still bearish on Bitcoin in the short term, and fairly so. During bear market, we see a lot of fake rallies that get people greedy again, only to come tumbling down later. This is exactly what Gareth is explaining, which is why he still believes Bitcoin will go down to 12 to 13,000 if not lower.
So I think that is a very important aspect about reducing energy, because I know that a lot of fund managers and investment portfolio managers, one of the things that they're always pressured on is being very environmentally conscious, right? So that's going to alleviate that issue. And then also the merge is going to change the way the mining is done, which almost creates it as a deflationary asset, almost like kind of a Bitcoin. So I actually think longer term, this is really bullish for Ethereum. And I do think that it makes it much more attractive to investors overall, not just for the utility purposes, but also for the savings and kind of a different way to invest versus holding US dollars and other currencies, fiat currencies. So I think that's very good. I think the biggest thing next week with the merge is it has to go smoothly, right? So, and this is big for the entire crypto market. Everyone's looking to that. They need to nail it to give the confidence to the crypto markets. If they do, I think you could get a little short-term upside, kind of the relief of, okay, it happened, it went smoothly. It doesn't change the fact that I think eventually Bitcoin's going to 12, 13,000, but in the near term, it should be a positive.
With Ethereum merge just around the corner, Gareth says it is extremely important for it to go smoothly because the entire crypto space's confidence depends upon it. If everything goes as planned, this could result in a short-term rally since it will be a very positive event in the crypto world. Thank you for watching this video. Please drop a like and subscribe to our channel to stay updated with the latest market news and events. See you guys in the next video.